Hello everyone. I hope everyone is doing well. This is the next video in our series on the banking system and how it relates to the current banking crisis. And if you didn't see my prior video uh, about the fractional reserve system, I've got that linked up here for you. Take a look at that one as a good starting spot if you don't have any understanding of what the fractional reserve system is. This is going to be the next step in that. We talked about in that video the fractional reserve requirements that a bank has. In other words, the Federal Reserve requires that banks hold a certain amount of cash in reserve at the bank in case depositors need to withdraw. Otherwise, the funds the bank has can be lent out or otherwise invested in hopefully safe investments. I'm going to get into today how much the bank actually has to reserve. And that way you'll have a better understanding and you can be a better consumer knowing whether or not your money is safe in the bank. All right, but before we get there, I just want to mention that I believe something great is going to happen for you today. So let's go ahead and get on with the video. All right, so we're going to talk about today how much the bank has to reserve in its possession to protect against any kind of withdrawals. In the example in my prior video, I gave the example of 10%. 10%. And 10% was an example of a requirement that the banks had at a prior time. But that's not the requirement now. The requirement now might surprise you. Let's see what that amount is today. I have opened my browser to the Board of Governors of the Federal Reserve System website, and this will tell us the amount of the bank's reserve requirements and kind of the evolution of it. This is from their announcement on March 15th, 2020. We know that there was something going on in 2020. It had to do with some health issues and that had a huge impact on the economy. So that was when the Federal Reserve took some action regarding that. So we can take a look at what the requirements are now. The board, which is when it says the board, it means the Board of Governors of the Federal Reserve System. These are the ones that decide what the reserve requirements are for banks in the United States. You don't get to vote for these governors. These are not like the governors of your state. These are a Board of Governors of the Federal Reserve System. So these are not elected officials. These are appointed officials. So just wanted to point that out and keep that in mind. All right, so as announced, and I'm going to go ahead and mark this here, kind of follow along if you can. As announced on March 15th, 2020, the board reduced the reserve requirement ratios to 0% effective March 26, 2020. This action eliminated the reserve requirements for all depository institutions. All depository institutions. So this action eliminated the reserve requirements for all depository institutions. In other words, the banks have, as of that date, the 26th of March 2020, they have zero requirements to keep anything on reserve. Let's see, is that still the case? Well, this is from the Federal Register, and this was published on December 1st of 2022. And we can see here action, the final rule. And you can see in here, there's some information about the Regulation D amendments. The adjustments to both of these amounts are derived using statutory formulas specified in the Federal Reserve Act. the annual indexation of reserve requirement exemption amount and low reserve tranche, though required by statute, will not affect the depository institution's reserve requirements, which will remain zero. And the effective date of this was January 3rd of 2023, which is the year that this video is being recorded. So the reserve requirements for banks is zero at this point and continues to be there. Now, does this mean that your money is at risk? Well, this is not financial advice, and nor is it legal advice or accounting advice. This is purely for educational purposes. There is banking insurance. There's insurance by the FDIC, and each bank your account should be protected by FDIC insurance up to $250,000 as of the date of this video. That would mean that any amounts above $250,000 that you might have in a bank might not be protected. Now, in the recent bailout or the recent closing of Silicon Valley Bank, the FDIC did indicate that they were going to protect all depositors, regardless of the amount. So the FDIC, in this case, did that and protected all depositors over that amount. Will they continue to do that in the future, and will there be enough funds to do so? That's an open question. You've got to be a good consumer. You've got to make sure that you research your banking institution and protect yourself and make sure that you're doing good risk management with your money. Now, many of you watching this may not have over $250,000 in the bank. However, there are many businesses that do. Their payroll might be above that. And so just to issue checks in their payroll might go above the $250,000 limit, or other reserves that they may have for maybe a building project, something along those lines. So this may have quite an impact on the economy, and keep an eye out for it. And so I'm going to keep making videos about the banking system. If you appreciate this type of information, please smash the like button and subscribe to my channel. And go ahead and share this with others. Thank you.